Thank you, Mark, and hello from London. So another week of weekly key reversals, though not as numerous as the previous edition. What the market failed to make up in quantity, I suspect may be more than made up in quality. Okay, so there have been weekly key reversals up in US dollar Thai baht, the French CAC 40 stock index futures, and the Shanghai Composite Index. Interestingly, this last one was not reflected in the Chinese CSI 300 stock index. This dichotomy was interesting just on its own, but I think some much more interesting ones are still to come. For weekly key reversals down last week, we had, in the markets I look at, Singapore SGX TSR20 rubber futures. An unusual one, I grant you, but then also we've had weekly key reversals down in Bitcoin, though interestingly not Ethereum, and finally a weekly key reversal down in Chicago Emini S&P Futures. Now, before you think I'm going to be going on again about Bitcoin, well, I'm not. Well, not really. My sole comment on this would have been just how it had not played out in Ethereum, though I do note that there has been an excellent follow through lower since then in Bitcoin, following the bearish pattern that has now spilled over into Ethereum. Now, my main discussion here will be about the action of the Emini S&P futures, and to a certain degree other stock index futures and stock indices. You see, I think that there has and is a great deal of indecision taking place in all stock markets, and last week's weekly key reversal down in Emini S&P futures is the latest manifestation of this. If we take a look at last week and the week before's action in some major stock indexes and stock index futures, you can see that this indecision has not been manifest in the intraday action, but on the interday action and now on the interweek action. So all on a larger scale. So let's take a look. In UK FTSE futures, 2 weeks ago we had a weekly key reversal up, but then last week we had a weaker outside week pattern. In German DAX futures, 2 weeks ago we had a weekly key reversal up, then last week one of the rarest of patterns that I've seen, a compound weekly key reversal up. This is a rare, and I think maybe I've only seen it 20 or so times in my lifetime, is when a weekly key reversal up or down, but in this case up, when a weekly key reversal up is outdone by a larger encompassing weekly key reversal up. One would like to look upon this as a superior bullish indication, but this week's actions have been limited, if still higher. In the US Dow Jones Stock Index, there was no weekly anything 2 weeks ago, then an outside week last week. As I've already mentioned, we've had a weekly key reversal up both in the French CAC 40 futures and the Chinese Shanghai Composite Index last week, but there was no major pattern the previous week, at least on a weekly basis. Then we come to the obtuse one, Chicago Emini S&P Futures. This had a weekly key reversal down last week at the top of the market, and contrary to what was seen in France, Germany, and even China. Yet that is not all. If we were to look at the market 2 weeks ago, we would have seen that it performed a weekly key reversal up. Thus, last week's action was indeed an unusual immediate countering weekly key reversal down. This is an unusual one to note, but when other markets are moving differently, it requires special attention. Now, I've recently tried to address the really big issues here in Emini S&P futures in my daily broadcasts over the past 2 weeks. I think it's worth reiterating them again. So, 2 weeks ago we had a big weekly key reversal up. Then last week we had an immediate countering weekly key reversal down, only halted in its fall by the rising short stroke medium moving average, currently at 40.81. Does this mean that the first bullish weekly key reversal up is cancelled and superseded by the second bearish one, larger bearish one? The answer is yes and no. I'm sorry to sound as obtuse as this market, So I'll explain it in more detail. On the surface, it does show an apparent stronger bearish pattern, overcoming a quite strong bullish pattern, and immediately. For those who like their answers simple, there you have it. However, the true answer is more complex. What it shows is the depth of indecision that this market has undergone since early April. Hence, I would say it is indecisive even now, purely because of its unusual nature. Personally, it would not have surprised me to see some weekly bullish pattern this week to be the counter to the counter, though I have to admit such a key reversal down as we had yesterday on the daily chart appears to be a seminal moment. This is one worth watching carefully, even more than before. So far today, we've had a lower open and a fresh try lower down through the Fibonacci congestion at 4108 and 4110 and halting temporarily at the combination of the important 50% projected Fibonacci level at 4082 and the rising short medium moving average currently 4081. Below this, well, there's nothing much bar last week's low at 4029 until we reach the rising medium moving average currently at 3978. That's below 4000. So please just be wary, as we have this huge overhang since April that is seemingly sitting above us now, and consecutive closes below the short medium moving average and the important 50% projected Fibonacci line may add to last week's overt bearishness. I am happy to share my videos, various charts, and answer any questions with anyone who is interested. And with that, I'll finish this section from London, and I hope you found these comments useful.